A closer look right now at auto sales. We are joined by Rebecca Lindland. She is Director of Research for IHS Automotive. And Rebecca, it's interesting, you know, Suzanne and Carol talking about small car versus large car, and you and I were talking about those big brawny cars. They're selling well. How closely is it tied to the price of gasoline or a recession, whether big cars are in or whether small cars are in?
Well, a couple of years ago when we had that big spike, Matt, and we saw those gas prices in June go up to over $4 a gallon, we did a little research and we looked back at what happened in previous oil crises in the 70s. And what we found is that consumers will change their buying behavior for about 3 to 4 months, and then they'll go right back to buying larger vehicles. So we've already studied this and we've looked and said, you know, when gas prices spike, consumers react for a very short amount of time. As they gradually increase, we don't see any changes in consumer behavior because consumers don't notice it as much in their pocketbook. So it really depends upon how gas prices increase.
Rebecca, do you see it in terms of your research, more importantly, whether or not they've got jobs or what the outlook is for the economy? This really plays into the strength of auto sales overall.
It does, Carol. I mean, the employment rate and job creation rate, even more importantly, is really a huge driver for auto sales. If people don't feel like they're going to be able to keep their job, or if they don't feel like they're going to be able to, get employed this year, they're not going to go and buy a car. Now, one thing that Suzanne touched on is the fact that financing is available this year for people who do have a job. So that's certainly going to help the market overall as well.
Have we seen, we've seen finance companies come back. We've seen them get bought. Have we seen financing really pick up at the end of the year? And do you expect that to continue into this year? I'm assuming that has a heck of a lot to do, probably more than anything else, with car sales.
It does, Matt. And also we're seeing leasing available again, which is helping the luxury market. So leasing typically is between 20 to 25% of the market overall. And last 2009 and 10, we saw almost no leasing going on. So that's going to really help in 2011. We started to see some recovery in mid-2010 on the leasing end. But as these finance companies get reestablished, we're going to start seeing opportunities for buyers again.
By the way, you said in the Bloomberg story earlier that really strong products are coming out of GM, Ford, and Chrysler. We've noticed that as well. We talk about it all the time. Is it that these companies sort of went to crisis level and then had to save themselves? I mean, why are other car makers kind of dropping the ball here as far as new production?
I don't know that anybody's really dropping the ball. I just think that GM, Ford, and Chrysler have really gotten their act together in terms of product design. And this started 3, 4, and 5 years ago when the industry was starting to get some inkling that, obviously Ford was in a lot of trouble in 2006 and 2007. So they've been doing work for the last 3 or 4 years. GM and Chrysler obviously went through a huge catastrophic change last year. And they're really able to just focus on their core markets now and really dial into what consumers want to buy. And so I think we're seeing more efficient manufacturing and even better design coming out of these studios.
Rebecca, when you look at GM, Ford, Chrysler, all of them had strong numbers here for December. Which of them in terms of products that are coming out do you find the most interesting and really have the most potential going forward here?
It's funny you should ask that because as I was driving in this morning, I was thinking about all the different vehicles that I've had the opportunity to drive recently. And I don't know because they're each really good. And I kind of want to get, to the point where I can say, well, I don't like that or I don't like this. But gosh, each one has been really good. And so, it's hard to say.
I want to follow up on kind of what Matt, what's happened? Because go back a few years and they most of them couldn't do anything right at this point, GM in particular. What happened? It's been a short period of time. Don't tell me just by going bankrupt that it fixes everything. What is it? Is it new management? Is it a new way of thinking? What is it?
It's paying attention. I was having a conversation a few years ago with Bob Lutz, and we were talking about just simple things like fit and finish, and that's a term we use in the industry, and it really means literally like, how is this car put together? And paying attention to the finishes on the product. How does it feel? And there's such an improvement, and it's just about paying attention. He told me a story about telling guys in the factories, look, this needs to fit tighter. I said, well, how do you implement that? And he said, you just tell them. And they said, oh, all right, that's how you want it now. There was a lack of pride in the work and a lack of proactive, let's fix this problem. I think all of that has changed, though, and the people that are still employed in Detroit are starting to pay attention, and they're starting to care about the product that's produced.
Of course, Bob Lutz has been paying attention for a long time, a giant in the industry, no longer,
Yes.
of course, at General Motors, but a great car collector and a great fan of cars. Rebecca, thanks so much for joining us. Rebecca Lindland there from IHS.